Good morning. Happy Friday. I'm Mark Sebastian, your only option, and this is Option Pit Live. Just me today. I've got my team out on assignment. Licia is currently researching new medicines for the common cold. Meanwhile, Andrew is out researching Vail resorts and their whether they've improved operations. So I've got them all over the country researching. So on the show today, we're going to be discussing PCE that came out this morning. We're going to be hitting on all of the markets. We'll look at all the charts. We're going to talk about the news that's hit. We're going to talk about what I see as an important special situation that is developing right now that could be what I think is going to be a phenomenal trade. And then I'll kind of tell you what I think of the lay of the land, then I'll wish you goodbye. But let's start with PCE. It came in at 2.6%. That was in line. And that was the excluding food and energy. The regular one increased by 0.3 and showed a 2.5% annual rate, also in line. So off of this news, just real briefly, futures are up about 10. So we got we got a little bit of a bull. We've got a little bit of a bull run here, but but not much. So my take on the PCE number is in line, is not hot. Would we want to see it actually miss these expectations? Yeah, but I don't think this affects what's happening with the market right now. The market right now is in kind of a funky spot. Obviously, the S&P down 1.59% on Thursday. NASDAQ, down more than 2%. Meanwhile, some of the more boring stuff really not affected as much. So I don't think this PCE number really has an outcome, affects the outcome of whether we get out of this sell-off funk that we've been in that has been messing with people so much. And so with that, kind of let me show you kind of where we are right now. One of the fascinating things on the market is it's been more than a year since the S&P 500 broke its 200-day moving average. In fact, it's only touched the 150 on August 5th. If I pull up my 2-year chart, now we're in a spot where we're seeing some touches of the 200. A real small one here in October of 2023. That is an incredibly long period of time. You could argue it's been over 200 days since it touched its 200-day moving average. Kind of funky when you think about it, right? And yesterday's action was really kind of unique because, all right, the different lines here, I'm going to stretch this out so it's easier to see. The different lines here each represent a moving average that I like to pay close attention to. And so the blue is 21. The red here is the 50-day moving average. This purple line is my 100. This kind of other purple blue line is the 150, and the gray is the 200. So we had not seen the 50-day kind of hold up any fight on this sell-off. Typically, the 50 will provide kind of some support, but not really. We went through the 21 on one big, huge day, sold through the 50. Then this, the interesting one was the big down through the 100-day, and then we popped back over. Did that 2 days in a row. Actually threatened the 50-day. Went through the 50-day on Wednesday. Threatened it again on the open on Thursday before we just completely plummeted. And now, decent PCE news, up 10. Friday, if we get another follow through here on SPX, then we could have some real potential funness on Monday. Kind of looking at the price action from yesterday, what I want you to notice is like we were in a range all day, right up until about 1 p.m. And then things really fell apart all at once. And do you know who the culprit was? NVIDIA. It basically hit its peak and then started just this really quick sell-off. Dropping $6 over the course of a couple hours. Pretty quick. It's not, I've definitely seen faster, but for a non-gap type move and not a new news move, that's quick. And it was relentless. So I think the S&P is kind of in an interesting spot. And, could, we could get a 200. If this is the best setup for touching the 200-day moving average since the August yen carry trade. Doesn't mean it's going to happen, but it is the best setup for another, a full touch and break of the 200. Looking at bond market, kind of the opposite, holding. There is some use of bonds as a flight to quality. And that has given bonds a lift. That's going to start to affect mortgage rates. It's not all bad. But yeah, the bond market really has stabilized. I would think that would put some sort of ease to the market here. But so far, it has not. The VIX. So this is what I look at. People often ask me, Mark, why do I look at the VIX? And I want you to kind of think about stop thinking about words like implied volatility and historical volatility, or just the word volatility forever. And I want you to replace that with option prices. And that, I think, makes my view of that's why I look at the VIX, and maybe why you would start, right? You look at the S&P 500 because you want to know what stock prices are. You look at the VIX because you want to know what option prices are. And the VIX is the measure to look at kind of market as a whole. How much do options cost? So if you think about it that way, now VIX is something that probably becomes a lot easier to start using in your trading. I'm thinking about buying a call in random stock number 1. Should I do it? Hey, I can just look at and kind of see where option prices are, and it'd tell me, well, maybe I should, without having to know all the the individual stats. It can actually help you in that part of your journey as you become a better trader. I'm thinking about selling covered call. Is it a good time? Wow, option prices are really low. Maybe I should, reevaluate. Obviously, there's a lot more nuance to that, but I think that's if you start thinking about the VIX as just how expensive are options, if I want to buy them or sell them, I think it's pretty easy to bring into your trading. So with the VIX, now that I've talked about why I look at it, you have the VIX hanging around at 21. Nice move. It's down a little bit today because, as we stated, markets are a little bit up. Right, SPY is currently up about 0.2%. The Qs are flat. Russell 2000 is down, and the diamonds, I'm guessing, are up. Yeah, and the diamonds are outperforming, which is the Dow Jones ETF. So markets are are up a little bit, which would mean typically you'd see the VIX down. But after kind of a couple of shocks to the system over the last couple of days, not a huge surprise that VIX is holding higher. And one of the things that's holding VIX higher, like moving back to the S&P, is this number here, average true range. And that I want you to think about that as how much is the S&P 500 moving every day, up or down? Not how much is it closing, how is it moving every day? And on in late Feb, bye bud, love you. Kid going to school. By Feb expiration, it was down to about $50 a day, and now we're back over 70. Movement has really upticked, and what do you know? This red line, which represents option prices, is moving up right with it. So, my take, I think we're in kind of a sticky situation here. Today, we don't get a little. If you've got a couple of things stacking on each other, right? Inflation, tariffs, some disappointing earnings. It's one stack after another. Sentiment, I don't know that sentiment is bad enough for people to start buying. So we're kind of in a no man's land here. All right, now let's talk about some of the news, and I want to talk about NVIDIA earnings, but I'm not going to do some deep dive on what they were doing in data centers and all the great deep analysis that everybody in the world who thinks they're an NVIDIA expert, which is everybody in the world apparently. And I want to talk about these earnings from a perspective of statistics. Now, I pulled up the earnings so option prices. Let me start here. Option prices are used by traders to gauge how much a stock might move after its earnings are announced. You can see it get priced into the options because, right, people bid up options before earnings because they're expecting a bigger move. So us as option traders, we can actually extrapolate out how much earnings move is priced into the options. And that tells us, oh, hey, they're looking for a 8% move in NVIDIA. You don't need to know that math. I just wanted you to know that, yes, option traders, option prices literally bet directly on how much a stock is going to move before earnings or after earnings. So I want to talk about NVIDIA. So we have NVIDIA earnings data going back to February of 2011. So that would be 14 years. That would be 56 earnings cycles. So that's a statistically significant data set, 56. All right, so that let's say so for instance, yesterday's earnings move, NVIDIA was priced in 8.38%. So they're looking for NVIDIA to be up or down 8.38%. NVIDIA, with a strong push into the close, the one I showed you, managed to fall 8.48%. So it moved just an itty bit more than the market was betting it would move. But pretty darn close. All right, so if a movement beat would be if NVIDIA moves more than the implied move, the guessed move. So as I stated yesterday, NVIDIA dropped 8.3. They were pricing at 8.38. It dropped 8.48. So it moved more than the bet. And so NVIDIA has moved more than how much the traders were betting on an up move in those 56 occurrences 16 times. So roughly about 25%. Or actually, roughly 25%. The down move, beating the guess, has only happened 4 times. This was the 5th. The last time it moved more was in February of 2021. That was a much bigger move than the market had been expecting, though. So, interesting little piece of data. Now, we talked about those. So there's stack 1 of the market. Stack 2 is all the geopolitical threats out there. Tariffs. The March 4 deadline is now becoming a thing again. We were off tariffs, then we were on them, now we're off, and then we were off them again, and now we're going to be on them again. And again, I think it's a lot of noise, and markets are using that as a bit of an excuse to sell off. Now, that's not a statement on whether tariffs are good or bad. Any type of, interference in markets generally, I'm generally a free market, but, if everybody's not a free market, then it's not a fair market. So, there's some value in using them as punishments. But anyway, I don't want to dig into the economics of tariffs, but I want to dig into the psychologics of tariffs. And clearly, it's like a jump scare for the market. It's like the creeping tariff behind the closet with a big knife in a horror movie. But long term, they should not affect how you invest. Near term trading, yeah, they're going to affect you. Long term, no. Now the other thing I want to talk about, so we've got the NVIDIA trouble, we got tariffs, and then there is a economic. They believe Washington D.C. is currently in a recession, and on top of that, you start to see lots of little firms laying people off. that starting to see some maybe is there some weakness in the economy? Is that another piece that is affecting the market? Because they are really coming after the leadership in the market. We talked about NVIDIA. Let me get you. Google has been absolutely punished. Tesla is at almost to its 200-day moving average. It's almost, it's basically to where it gapped in November. Meta, real aggressive sell-off. Microsoft, but the only one that is holding any water is Apple, and that is because Apple is where people go to hide. But even the mighty Apple is starting to roll over. So I want to talk to you about now, I've kind of laid out all the stacking things. I want to talk to you about how we stop sagging, how things turn around. And it's about NVIDIA. NVIDIA, despite the biggest move that it's had in quite some time, well, it's DeepSeek. Outside of the DeepSeek gap, this is the biggest move on a sell-off in a while, and that's by far its biggest candle in a while. Despite that, we're post earnings. So take a look. This red line, you'll recall, represents option prices. So even with that huge sell-off, option prices are back to where they were kind of a little when pre-earnings, but not at their peak. I think by Monday-ish, I believe it's going to be back down to like 45, because here's how I think the playbook works. You'll notice NVIDIA is down again this morning. Makes some sense. NVIDIA is going to be down a little bit more today, but not like it was on Friday. I believe it could test, currently kind of testing this bottom candle from February 3rd, the bottom of DeepSeek. So we'll get it'll end a little bit lower today and maybe come in a touch lower on Monday. But by Monday, I'm expecting the big piece is that option prices will be down significantly from where they were just a couple days ago. And the earnings move will have played itself out. And so I've created a trade that is going to take advantage of this NVIDIA special situation. The last time we did an NVIDIA special situation like this, we did back-to-back 70% plus winners. In a similar situation, not exactly the same in NVIDIA, that we had we had a really nice win there. I just deleted that number on accident. We had a really nice number there. And with this post earnings NVIDIA trade, I'm targeting 100%. If you want to join me, then click the link that you see in front of you, or just go to optionpit.com and you can check it out there. All right, so we are running up against it here. And pre-market, yeah, S&P futures are off the highs, but still holding green. VIX futures are green. We may touch that 150. I think we're going to be down a little bit today. On the open, I think we're gonna probably immediately sell off after the open. Then we will probably bounce a little bit. And we might drop enough to get to that 150-day moving average on the S&P. Maybe. And then maybe we get a bounce kind of into the end of the day. If we don't, if today ends up being really ugly, Monday is, again, could be a serious risk of a major correction if we don't get that. We've seen, believe it or not, 5 years ago today was kind of a lead up into that COVID weekend. So kind of interesting. All right, everybody. Follow me on Twitter at OptionPit. Check us out, optionpit.com. And if you want questions or you want to know about our services, give us a call, 888-872-3301. I'm Mark Sebastian. I am your only option. Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.